Hi, I'm David Liggett with Data Center Hawk. Making decisions in the data center industry without solid information is tough. And that's why we provide a real-time platform for North America and Europe data center market information. It's designed to help you use data today to make better decisions tomorrow. The European data center market can be challenging to understand, so that's why today we're covering European trends with our lead European analyst. We hope this gets you up to speed on what's happening in Europe. Hey, we'd love for you to help us out by the following. Simply click the like button on this video, share it on your social channels, or comment with your thoughts on the topic. We greatly appreciate it. Now let's get into the European trends. Hey, I'm David Liggett with Data Center Hawk, and I am really excited to be joined by Dan Scarborough. And Dan is our lead analyst in Europe. So Dan, good to see you. Thanks for joining.
Nice to see you, David.
We are at the end of the third quarter, and we're actually into the fourth quarter, and I'm excited today to get to talk about some of the trends that are taking place. Dan is right at the tip of the spear of all the activity that's happening in the European data center markets, and it is certainly a focus area of growth for our markets today. I feel like we have seen such strong growth over the last several years, but even specifically in 2020. And so, Dan, really excited to get to speak with you about that growth today. And I want to start with the top markets that we track. And this is Frankfurt, London, Amsterdam, Paris, and Dublin. FLAP-D for those that follow the industry. That's the acronym that we will use to describe those. But what are some of the overall feelings surrounding these markets today, especially after the third quarter?
Yeah, thanks, David. I think it's, I'm not an American footballer, right? But you would imagine that the first thing to say is that it's all to play for in the last quarter.
Mm-hmm.
I think, depending on what location you're from and which operator you're talking to, they have been some delays on some of the contracts that people were hoping to sign. The contractual commitment from the client is still there. I think there's been a bit of a challenge in getting certain things over the line from a resource requirement perspective. So those are maybe the teams that haven't scored in the third quarter, but are hoping that the fourth quarter is going to land, some of those touchdowns that they've been waiting for. And then you have the other operators, that have really had a great, amazing quarter, specifically in the UK. We've seen a lot of activity there. And they are also expecting more activity to come. So generally speaking, we're seeing a significant amount of development activity. We're seeing a lot of leasing taking place. There seems to be a bit of a disconnect between the commercial teams from some of the web scale customers and their design side. But there's still an expectation to deliver within relatively tight timescales. So I think that's putting a little bit of friction between the operators and the customers. But all in all, it's very buoyant. Which is a bit of a contrast when you think about where we are from a COVID perspective. I think COVID itself has placed some challenges on how these customers are developing their sites from both a pre-development and an operations perspective. But at the same time, it's increasing the capacity significantly. So if you look at organizations like Zoom, who pre-COVID were not necessarily of the size and significance from a customer perspective for some of the colo operators that they're working with. Now they have kind of almost moved into a league of their own, right? So I think there's a fair amount of movement between the types of customers that the people are working with. We've certainly heard that there has been, a few casualties of the pandemic in terms of within certain sectors that have been impacted pretty hard by this. So the travel sector, etc. But overall, it's been a very, very buoyant quarter.
So Dan, one of the things that we've seen continually in Europe is the Frankfurt data center market continuing to grow. Why do you think it's become such an attractive data center market?
So I think each one of the markets have got their own kind of individual factors and individual kind of aspects. There's definitely a similarity from a trending perspective appearing between certain markets like London, Frankfurt, and Paris spring to mind. There are a lack of appropriate sites and with appropriate power capacity in some of those markets, which is driving some of the real estate costs up, and it's making it harder to develop or to kind of plan new capacity in those locations. And off the back of some of the pricing within Frankfurt from a land perspective, we're certainly seeing things moving, people looking slightly further afield than they have done historically. The other thing about Frankfurt as a location, it's not a huge population. Right? I think it's about 300,000 people, compared to London, which is 16 million or 13 million, right? So the amount of data center capacity in a location like Frankfurt compared to London is very, very significant. The percentage of power allocated to data centers in the Frankfurt market is something like 35 to 40% of grid capacity goes to data centers. And I think we've seen, concerns in locations like Amsterdam, which we're now coming out of, where, almost too much of the power capacity has been allocated to one sector. So I think that's something that we've certainly seen. The other thing about Frankfurt, it seems to be the key European landing point for Asian capacity.
Interesting.
So, we've been seeing a lot of the Asian capacity coming into Frankfurt. It's very, very connected, very well connected. So I think there are certain factors that we're seeing. A couple of the cloud providers have increased their commitment to availability zones and capacity in the German market. We're seeing development outside of Frankfurt in other parts of Germany, which is kind of matching against that commitment from some of the big customers that are driving the capacity requirements. And because of some of the size of the pre-leases and the leases that have taken place in some of these markets, I think you're seeing, the key operators investing in data center ready capacity to try and win this capacity that's coming on board. But there's certainly a lot of stuff under development. There's certainly some pre-leases that we've seen with some of the operators there. But the planning time period in Frankfurt or in Germany in general is quite long. It's a 2-year planning cycle. So I think you have to be in it quite early on. So there's definitely quite a lot of speculation from some of these operators, but they're anticipating the demand coming through what they've seen and what we're seeing with the growth in compute. So.
And Dan, compare for those that are listening, trying to understand that planning timeline, kind of match that 1.5 to 2 year timeline in Germany to other major markets in Europe. Like, how does that stack up? Is that traditionally longer than most of those markets? Is it about the same? What does that look like?
I think that the challenge with the planning aspects in Germany is it needs to be significant, somewhat more detailed from the outset than it would be in some of the other locations. The UK is, conventionally a short run, a 6 month to 12 months. Some of it's dictated by what type of land asset you're buying, whether it's, a greenfield or a brownfield development, or there's some type of, industrial application already in place for that location. We've seen some quite significant prices being paid for land assets with planning and power in the UK. in particularly in and around the Slough area, which seems to be the area that's got the majority of the capacity coming online from the UK. And there's certainly a ton of stuff in development in that location. And we're also seeing interest coming in from various different new parties with significant amount of capital that are looking for a home for their capital
Sure.
post-COVID, right?
Yep.
There are a fair number of financial institutions that historically have got a lot of their capital tied up in commercial assets, and those commercial assets are changing post-pandemic. So the real estate, the commercial office real estate asset is different post or where we are now to where it was before. So I think quite a lot of these organizations are looking at places to place their money. And we've seen, I think one of the exciting things about this market is there are quite a few startups coming in, right?
Uh-huh.
There are new teams with new capital, experienced teams with new capital that we're seeing coming in. And I think there's quite a lot of work going on in the background that we're, having to uncover and find out what exactly that's going to entail. So that's been quite an interesting thing.
Yeah, and I think you bring up a really good point just about the capital that's coming into the space today. I think one of the things that we would certainly agree with is the interest in capital that is looking at the traditional commercial real estate market, finding that it looks different, as you mentioned, today than it did beginning of 2020. And, the data center industry right now is somewhat of the shining star of real estate asset classes because of the continual, dependence on, technology, IT infrastructure for businesses to grow in the future. And I think, one of the things that I think conceptually we all agree with is that, the development in the U.S., is probably a few years ahead of what traditionally has happened in Europe, and that's probably ahead of what's happening to an extent in Asia. And I think right now the period of time that not just the main markets are in Europe, but even some of the secondary markets, there's a lot happening, and there will be in the future. And I wanted to hit really quickly on the secondary markets that are outside of the main markets that we talk about a lot from a European perspective, but there's increasing activity in other areas besides the flat D markets in Europe. Talk about some of the trends that you're seeing in those secondary markets today.
Yeah, I think the sector historically has felt that it could service the European market from those key 5 locations, right? And I think it's becoming increasingly clear from a GDPR perspective, from a kind of low latency application perspective, or high bandwidth required applications, and the way that the consumption of compute is changing, that there's a requirement to have much more of a meshed data center network across multiple different locations. And you can see that from things like the the Amazon Outpost deployments, right? So cloud operators who have potentially had their historic kind of zones are expanding those zones into kind of more edge deployments to deal with the ongoing demand and requirements for capacity that they're seeing. And there seems to be I wouldn't say it's almost easier to compete in some of the newer markets, right? So if you are an operator who has got a good relationship with the hyperscalers, and you're aware of some of the locations that they're looking at, if you can find the appropriate real estate asset, you can get it planned, and you've got a relatively short construction timeline, there's a good chance that you could provide that capacity to them in that given location. Whereas in some of the more established markets, there's certainly a lot more choice. There's certainly a lot more capacity potentially available in some of the more flat market locations. And it's interesting, depending on what operator you are, we're seeing operators that are focused across both tier 1, tier 2, and tier 3 markets, And then there are other operators that are more focused on the tier one markets, and
Mm-hmm.
they would rather do a larger scale deal in a London than a smaller deal in a tier two location. So I think there's certainly room for everyone from what I can see. There's availability zones being planned in some of the southern Europe destinations like Italy and Spain. There seems to be quite a lot of activity going on down there. Like I said earlier, Germany is expanding into a number of other kind of metropolitan areas in Germany that are not known as being one of the key 6 data center destinations. We're also seeing markets like Zurich expanding significantly. Warsaw seems to be seeing quite a lot of development activity as well. I mean, from what I'm hearing and what I'm seeing, the operators that are only in a smaller number of geographical locations, they've got quite strong ambitions to increase that number relatively quickly. So there are, site acquisition teams working across, not in their tens, but in their, 7 and 8 locations, looking at different sites that could be appropriate for their hyperscale customers. And, they seem to be the advanced party for the cloud operators looking for appropriate assets for them to deploy their capacity.
Yeah, and one word I think that's coming clear to me to use to define our industry is really resilient. And in the midst of the last 9 months with what's happened in the world, the data center industry has really grown larger. And so talk about how you think about 2021. Obviously, we're in the final stages, will be soon, of 2020. And then going into the new year, what do you think will be on tap for activity and growth in Europe from a data center perspective?
Yeah, so I think the thing that makes this a challenging sector to predict on a quarterly basis is that the size of the potential leasing activity in a 1 or 2 given market. If one of those contracts is signed in a given quarter, there's a significant amount of absorption in that market.
Sure.
Right?
Yeah.
And there are definitely a number of those leases pending across the market. So it'd be interesting to see which ones of those leases get contracted over the course of the next quarter.
Yep.
So that's so I think the predictability of it on a quarter by quarter basis is becoming slightly more challenging.
Sure, absolutely.
And I think that's partially dictated by the lumpiness of the individual contracts.
Yep.
I was looking at the data that we put out for Northern Virginia, and it seemed to be, a significant more number of leases. It seems that the volume is there in a location like Northern Virginia, where so it's easier almost to predict what that growth curve is going to look like in some of the more, depending on what type of market you're looking at. So that's one thought process. I think the other thought process from a capacity requirement in Europe is there's going to be a couple of new operators. I'm aware of at least 2 operators that we're not currently tracking from a location and a site perspective.
Mm-hmm.
That one I know has got one site. I don't know where it is. They haven't told me yet. And I know that another one is looking at recruiting people from a development director perspective. So I think we're going to have a couple of new entrants.
Yep.
In the market next year. I think that you could, if you were a gambling man, you would be able to probably predict or within your crystal ball, David, your data center crystal ball,
Yeah.
who those operators would be. And that's quite exciting. And then I think we're also seeing, some of the operators that historically are focused on development activity in 1 or maybe 2 markets in Europe, they're expanding into other markets. So there's at least 2 operators that I'm talking to who, are a dominant force in a single market in Europe that have got, quite aggressive expansion plans outside of that single market. So that's another trend that we're seeing. And then I think the final trend that I'm quite excited about as well is that, despite there being, some, large kind of £100 gorillas in the flat markets, you're still seeing, smaller organizations, well capitalized with differentiated business offerings and, coming in with, not insignificant capacity that they're planning and they're building out, that are looking at competing and making sure that the larger operators are on their toes, if you like. So it's I think Europe is a very exciting place to be from a data center perspective at the minute, and I'm excited about how we can expand our coverage into some of the other markets in Europe and give our subscribers an understanding of how that growth and that development is kind of moving around some of these other locations in Europe.
Yeah, absolutely. Well, Dan, you're right in the middle of, the different developments and the things that are taking place in Europe. And as always, appreciate your commentary and insights on the market. If you want to learn more about what's happening in Europe, you can get on datacenterhawk.com. And, Dan, we continue to, feature his thoughts on the industry, not just through our videos and things like that, but through our blog and through our content. So, Dan, once again, appreciate it. Great to connect with you and look forward to seeing you again in the future.
Thanks a lot, David.